Limited, Sanjay Jain, Group CEO of the company, is joining in with us. They did have the Investor Day where the company spoke about a 555 vision. What is that vision about? What is the outlook of the company and the strategy going forward? To talk all of that, we have Mr. Jain joining in with us. A very good afternoon. Thank you so much for joining in with us. And Sanjay, let's start by talking about this 555 vision, right? What is it that it means in terms of what is the 555? What is the strategic step that you're taking to achieve that $5 billion US GMV in the next 5 years? Why are you so bullish on it?
Hi, good afternoon. I think firstly, before we come to the 555 very specifically, there are a few important relevant factors here. Firstly, PDS today has about 60 offices in 22 countries, so well spread globally. Our relationships are very well in place with the top 200 retailers, very strong in UK and Europe, and increasingly now getting stronger in US market as well. We have carefully curated a suite of product and services. We're increasingly emerging as a solutions company. We are financially stable with strong focus on ESG governance. So this is about us on one hand. On the other hand, the global retailers now are increasingly looking forward to somebody who can provide them solution. I mean, they want to really focus on the front end of interfacing with retail customers. Can they find a counterparty who can actually take over the responsibility of, say, getting the garments manufactured, taking the responsibility of the supply chain management related to it? So PDS is therefore that company that can cater to this requirement of the retailers. It is with backdrop that we have curated a 555 vision. What it means is that in about 5 years from now, we believe we can clock in 5 billion of gross merchandise value, and that should enable us deliver close to a 5% PAT. So that's what it entails. And we now believe that we also have a strategy which covers the relationships across customers, which covers the geographical spread, which covers the suite of product and services. So it is just about now unfolding of that in about 5 years can actually, drive us towards that milestone that we have set for ourselves.
Okay, so you're talking about a revenue CAGR of almost 20% over the next 3 to 4 years, and the profitability figure should come in at around 5%. Sanjay, do you believe bulk of this will only happen towards the end of this period, or from FY25 itself, there should be meaningful recovery, in the prospects? Because the last couple of years, there was that uncertainty. The orders were getting pushed back or cancelled because of the entire, demand uncertainty. Do you think 25 is going to be much better?
See, the uncertainties are here to stay. I think we will have 1-2 bullish years and then some factors affecting it. But what is important is that as we look forward to, as you mentioned, a 20% rate, the last 4 years or so have given us about 17 to 19% CAGR of growth rate. So, and last 4 years I've also seen a COVID. Last 4 years I've also seen inventory issue with the retailers. We believe, given what we have achieved, notwithstanding the conditions, we are, I think, feeling positive about the potential to achieve this. And also, I think important is that I think the worst period, if we call the last few quarters as a tough period, that's increasingly behind us. Our order books are 30% up this year. So I guess as a building block perspective, this year should be a good year going forward as well. Answering to other point, I don't think it is lopsided towards the rear part of the next 4-5 years or so. Every year you will see us carefully progressing in that direction.
Right. Sanjay, what's the outlook in terms of North America and America overall? Are you seeing increased inquiries from that region? And how much more? Are you in talks with any global MNCs, any tie-ups that are planned there?
So firstly, the markets are really looking good. I think all of us had faced a high inventory that our customers were carrying in the North American market. We believe that has corrected to a large extent. So therefore, the traction that we are seeing building up from that part of the world is very, very positive. That's on the first part of it. In terms of our relationship over the last 2-3 years, we've carefully curated relationship with Walmart, with Kohl's, with Hanes. We've recently Costco we have been serving. We've recently been onboarded by Target to serve them as a customer. A large e-commerce company we've just started, got into an MOU with them. So carefully, we have now important 5-6 relationships that I think can unfold into the numbers that we're talking from this market.
Put it in context for us, Sanjay. So the tie-up recently with Target and the e-commerce player, I think you are referring to H&M, and you are in discussions with the likes of IKEA, Norlanka, eBay, etc. as well. Tell me, what could be the revenue contribution from some of these entities? Because of course the entities themselves are quite large. What portion of business are you expecting from them?
See, in the UK market, wherein we have been active for many years with large retailers, we've been able to take a position on an average catering to 5% of their requirement. Some of the large retailers. So if I translate that kind of relationship we can build over next few years, I think the names that I mentioned, Walmart, Kohl's, and Gaines, Target, Bestseller, these are all multi-billion-dollar organizations. So if that kind of 3 to 5% aspiration we work towards, in the next 3-4 years, our sales from US alone can be about $1 billion. We've done about $150 million plus of sales last year, and that should gradually scale up. That's the potential. I think we feel positive we should be able to lock in $1 billion of sales from US market.
Right. Okay. And, I just want an update in terms of, talking about other companies and foreign companies, Ted Baker, right? You all had signed a partnership with them, also 10-year partnership. What is the update on that front? And, given I understand that this is a high margin business, so how is that going to be helping the margins of the business going forward? This year it was around 4%, I think, for PDS. Going forward, where's the EBITDA margin headed also?
So the EBITDA margin is about 4.5%. And when we talk about 555, we're actually looking forward to a 5% PAT margin, aspiration that in about 4-5 years. And one of the constituents to enable us get there, besides the economy of scale, cost efficiency, would be our migration to more services and solution company. So therefore, how do we see Ted Baker in that context? Ted Baker is an attempt to do complete brand management, for a brand which is held by ABG Group of US. So when we're doing a complete brand management, it is a kind of a very high-end services that we're offering. So therefore, while PBT margin on my blended book of design-led sourcing or otherwise is circa about 3.5 to 4%, but Ted Baker business last year gave us about close to 6% PBT margin. Although its size in the overall proportion is small, but if we keep adding such initiatives in the direction of providing solution, that's how one of the building blocks of moving up to 5% PAT margin is looking as a possibility.
Point taken. Sanjay, on that note, we let you go. Appreciate you making time and speaking with us today.
If you like this video, then like, share and subscribe to ET Now.